Car and health insurance is something everybody needs, but saving money is something everybody needs even more. The problem is that these two often don't go together. Fortunately, there are many tips and tricks you can do to save a lot of money on insurance that many don't know about, even though they can be life-saving. So let's take a look at what these are. Welcome back to PST Finance. Let's talk first about car insurance. If you're a young person, which typically means you're under the age of 25 and have no previous driving record, things might be especially difficult for you. Insurance providers consider young drivers to be the most risky clients, and so they typically charge them the biggest amount of money. In addition, since you have no record, the company can't know how reckless of a driver you are, so they tend to charge higher amounts because of that. A trick to get around this is to add your car to a more experienced driver's insurance plan. If you add your car to your dad's family plans, for example, insurance companies will be more willing to charge less, assuming that your dad's driving record is good. You could then pay him the reduced amount off the books. Even though the payments are off books, there is nothing illegal about this, as long as you make sure to inform the insurance company to avoid any legal complications. You should note an important downside of this trick though. If your car is on your dad's plan, you're not building up a driving record. If in the future you try to add a car to your own insurance plan, you'll have zero driving experience as far as insurance providers are concerned. So only use this trick if you really need a car as a young person and you can't afford insurance. Now let's have a look at some insurance plan tricks and which insurance plan would be best for you. First, there's full coverage, which covers everything from damage to others' vehicles, damage to your own vehicle, and even the cost of buying a new car. As you might expect, this is the most expensive kind of plan. Second, there are comprehensive plans, which cover all sorts of cases unless you need to buy a new car. Finally, the cheapest kind is liability-only plans, which only cover damage to others. If you want to save up, the best combination would be a cheap car with a liability-only plan. The plan will cover damage done to others, and as for your vehicle, it will be cheaper just to replace it entirely with a new car, since you didn't pay a lot for it in the first place. Be careful, however, not to pick a plan with a very low limit. Low-limit plans are cheaper, but cheaper doesn't always mean frugal or best. Suppose that you get into an accident and find yourself required to pay $250,000 in damages. If the insurance limit is $50,000, you'll be required to pay the remaining $200,000 on your own, and you probably don't have that kind of money just lying around. This isn't a too far-fetched scenario since it's common and easy to find yourself facing a six-figure lawsuit after a car accident in the US. Play it safe. So don't just settle for the minimum state limit. Get a cheap car and a liability-only plan with a not-so-low limit. Similarly, it's pointless to pay for comprehensive coverage on older and cheaper vehicles. You don't need to pay hundreds or thousands of dollars annually just in case an old car gets damaged. It might be cheaper to repair or replace it yourself. Overall, keep in mind what each plan is meant for and choose accordingly. Once you've decided which kind of plan you'd like to get, you should take into consideration these simple tips and tricks to get the cheapest premium you can. Always check if you qualify for discounts offered by your state. Some states offer discounts. For example, if you take certain driving lessons, you're in a particular financial situation, or if your car is a certain age, so do your research. Add security items to your car if you can, such as a dash camera. Sometimes this can help lower insurance costs. Make sure to let your insurance provider know if you don't drive your car much. Insurers assume by default that you drive an average of 15,000 miles per year, which is what typically takes for people to commute to work 5 days a week. If you work from home or cycle to work, for instance, make sure this is reflected by your insurance plan. Also make sure that if you have a second car that you rarely use, that it's registered as a for-pleasure vehicle. Try to find a safe place to park your car in, such as a private driveway, and restrict the number of people who use it. Moreover, when you write down your job title as you fill out the application form, make it sound as fancy and respectable as you can. Insurance costs are determined by a formula, and these factors are all fed into it. They may not seem like much, but it's important to save every penny. If you can, pay the entire annual amount up front. Companies often offer a discounted price for those paying up front. Additionally, a 12-month coverage plan is usually cheaper than a 6-month one. With this advice in mind, the last step is to choose the best insurance provider for you. Since there are too many of them, your best bet is talking to a local insurance agent. These are people who specialize in finding the best insurance plan for your financial situation. Insurance companies will be looking out for their own interests, not yours, so it's best to talk to independent agents instead. They also respond faster. Look up the website of an insurance agent and you will usually find a form to fill out or a number to call in order to contact them. A trick to save time is to write up an email that includes all the relevant information they need, including your car information and financial status, and send it to multiple agencies at the same time. Agents will be motivated to reply to you with the best offer they have so they can get a commission from the relevant insurer. They can also offer you valuable advice regarding what discounts you qualify for. The best part is that the commission is all the payment they get, so you don't need to pay them any fees. Alternatively, you could use an online comparison website. Each insurance company posts the details of its various insurance plans on its website, so you can visit each company's website and look at the details for yourself. However, again, to save time and energy, there are websites that can do the comparison for you by listing different plans side by side and doing most of the calculations. However, contacting a local insurance agent is still a much better option. Most comparison websites can leak your information to outsiders who may want to use it to spam you with all sorts of ads, so it's best to avoid them. Let's now move on to saving on health insurance. If you're generally healthy, or if you can't afford good health insurance plans, you're better off with a cheap, high-deductible plan and health savings account, HSA. What's the rationale for such an idea? Well, let's take a hypothetical example and suppose that you stick with an average coverage plan. Say you're paying $600 per month with a deductible of $6,000 and an out-of-pocket maximum of $10,000. Now, there are basically three kinds of medical bills. The first is bills for regular health checkups. These are covered by almost all insurance plans, even cheap ones, so set them aside for now because they don't show the difference between cheap and average health plans. The second is bills for relatively small medical treatments, costing around $5,000 to $30,000, let's say. The third and final scenario is major medical treatments, which can cost hundreds of thousands or even millions of dollars. Given your average health plan, you'll pay $5,000 for a $5,000 bill and $10,000 for a $15,000 bill. What if you had a cheap plan with a $15,000 deductible and $20,000 out-of-pocket maximum for which you pay only $200 per month? You would in that case pay $5,000 for the first bill and $15,000 for the second. So the cheap plan will cost you $5,000 more than the average one for the second bill only. But notice, however, that you would save those $5,000 in a year by sticking with the cheap plan, because it would allow you to save $400 per month by requiring you to pay only $200 per month as opposed to the $600 of the average plan. That's not all. If you put the $400 into an HSA, which is tax-free and offers a lot of benefits and discounts, you would pay less than $15,000 for that second bill. The general lesson here is that for both regular checkups and huge medical treatments, it doesn't matter whether you have a cheap or an average plan. Regular checkups are covered by both, and huge bills won't be covered by either. As for average-priced medical bills, the difference isn't big enough to justify going with an average plan rather than saving thousands of dollars each year with an average one. So the best option is to put the money you save from cheap plans into your HSA. Finally, always negotiate with healthcare providers to bring down the amount you're required to pay for any kind of treatment. Insurance companies already negotiate with healthcare providers to bring the price down for you. Because of this, there's a common mistaken belief that insured people cannot negotiate further. But for many hospitals, for example, this isn't true. If you find yourself having to pay a bigger amount of money that you're comfortable with, even with insurance, call up your hospital and inform them that you cannot pay. Many will try to reach an agreement with you and let you off with a much smaller amount. The reason for this is twofold. First, there are no strict constraints on how much hospitals should charge a patient, so they typically charge very high amounts, expecting insurance companies to negotiate anyway. The amount often remains high even after the negotiation, though, which is why they might be willing to negotiate with you even further. Second, if you cannot pay, it would cost hospitals a lot of money, time and effort to try to force you to pay by legal means. Alternatively, they could sell your debt to a collection agency, but they typically buy debt for very cheap, so the hospital will still lose some money. This is why they will be willing to lower the price if you indicate that you will pay immediately if that happens, so be sure to make that clear. This, of course, applies even more commonly to people without insurance. If you don't have insurance, be sure to make that clear to your healthcare providers. People with an HSA should do that too, since they're technically paying in cash without insurance. So now, the next time you want to buy a car or look for a health coverage plan, you know what to do to save every penny you can with these tips. Which did you find the most helpful? Do you have any other tips in mind? Make sure to share what you think in the comments down below. And make sure to like the video and subscribe for more tips and advice. That's all for now. See you in the next one.